So, as we all know, Treasurer Scott Morrisson handed down his third budget last night. And whilst the extent of the measures weren't as wide as they have been in previous years, there was still a number of them that may affect you. So, here's a snapshot of what we believe are the key takeouts. So firstly, the idea is that the maximum number of members may be increased from 4 to 6 in a self-managed super fund. Now this may have good implications for those with larger families. Also, audit changes for self-managed super funds. Should there be 3 good audits with no breaches reported, then you won't have to actually get your fund audited for another 3 years. So you'll have 2 years of potentially no audit fees. So that's a good thing to help reduce the costs on audits. With superannuation changes, there's also removal of the work test for those who are aged 65 to 74 and have balances under 300,000. So that's great because previously you had to work at least 40 hours in a 30-day period. And that will help boost account balances. There's also an opt-out for those who are earning large amounts of money where the SG component does go over the current cap of $25,000. So this will mean that the penalties will be reduced and you'll be able to opt out of the additional super contributions. A Protect Your Super package has also been introduced. So this is actually threefold. So it will limit the amount of fees on smaller account balances. So this is great for younger people starting out. There's also an opt-in for insurance for those who are under age 25. This is good and bad. So one is it will help boost the amount that's going into super for younger people. But if it's not managed properly and younger people become uninsurable, then there could be an issue in terms of getting insurance down the track. So as always, we do suggest that advice is sought. There's also an inactive clause where any account balances where there haven't been contributions in a 13-month period, they will actually be sent off to the ATO, and this is especially for smaller account balances, where the ATO will endeavour to match them with the main super fund for people. So it stops, having 3, 4, 5, 6 super funds around the place. Again, good and bad. A lot of people have smaller super funds that just pay for insurance. So that will need to be managed appropriately and advice sought in a number of circumstances. Income tax cuts will be delivered over a 6-year period. However, in its current form, Labor have already come out and said that they won't accept the whole package. So to watch this space, it does need to be legislated in Parliament. Having said that, it will simplify, if it does get through, it will simplify the tax brackets. So that can be a good thing. For small businesses, the extension for immediate write-off of any assets under the value of $20,000 has been extended to the 1st of July next year, which is great. It means that you get immediate deduction rather than depreciating that asset. And to try and prevent or minimise the black economy, then any cash payments over $10,000 are not allowed going forward. So that's something that does need to be mindful of for those businesses in cash. There are also a number of changes for pensioners and also work bonus tests. We've put it all in the detail in the attached email. So really encourage you to have a read of it. And as always, please pick up the phone if you've got any questions. Speak to Warren, Glenn or myself. We'd love to talk to you and help you through any changes. As always, devil's in the detail. It needs to be passed in Parliament. And watch this space. We'll definitely keep you informed. Thanks for now.